Hello students, in today's class we will discuss one of the special topic, an important topic, that is special tax provisions. Watching Mysore University. Let's see, what do you mean by special tax provisions? Here special tax provision is in time to time central government and state government come up with schemes for promotion of trade, commerce and welfare of the society. So to bring promotion for the trade, commerce and society, they will provide a scheme. They will bring a scheme. To encourage this scheme, government will provide help. Government will encourage entrepreneur, okay, to come up and start their enterprise in that area to promote trade, commerce and welfare of society. So here, if you consider here, a special tax provision refers to a provision drafted in any branch of law to facilitate smooth functioning of beneficial tax provisions. Like I have said, government and central and state government both, they will come up with schemes to promote trade, commerce and social welfare. In order to ensure smooth functioning of that schemes, they draft special tax provisions. Now let's see what are the examples of that. There are so many special tax provisions, such as tax provision in respect of free trade zone, tax provision in respect of infrastructure, tax provision in respect of backward classes and exporter. There are so many. In today's class, we will focus only in tax provision in respect of free trade zone. In free trade zone, we we have to, one is new establishment of industrial undertaking, and another point will be offshore banking. That is income, if you got income in respect of offshore banking units. 2 points will come. Let's see what is first. That is income from newly established undertaking in free trade zone according to, that is in section 10A. But nowadays it is not exist. This exemption under section 10A is not allowed, which effect from assessment year 2012-13. So we won't focus on this thing. We will only focus on the second heading, second point of free trade zone, that is deduction in respect of certain income of offshore banking unit or international financial center. If you notice offshore banking, let's see what is offshore banking first. Offshore banking refers to bank regulated under international banking license. Bank which get international banking license, an individual or company will maintain an offshore account. Both individual as well as company can open offshore banking account. Why they will open? Why won't they refer normal banking system? Because if they open offshore banking account, they will get benefit both from financial and as well as legal advantage they will get. That is, they will get advantage such as it provide greater privacy. It will provide greater privacy. It will provide greater privacy and little or no tax they will charge on your deposits, as well as easy access to your deposits and protection against local political or financial instability in your country. They will protect from all these things. You will get advantages from all these things. Because of that only, people will prefer offshore. Now moving further, where a scheduled bank or any bank incorporated by or under the law of a country outside India having an offshore banking unit in a special economic zone derive income. Like I have said, the bank which get license from international, that is outside India, they are offshore banking, and it have to be open in a special economic zone and condition. That is first, from an offshore banking unit that is income which is derived from offshore banking unit in a special economic zone, or second, that is a banking business refers to, okay, that is section 6 subsection 1 of Banking Regulation Act, if they get permission for develop and maintain or operate, develop, operate and maintain a special economic zone by doing banking business, if they get permission under section 6 subsection 1 of Banking Regulation Act 1949, they will get deductions. They will get deduction from their gross total incomes. Now, how much deduction they will get? They will get 100% deduction for 5 years, from where they will get permission under section 23 subsection 1 clause A of Banking Regulation Act 1949, or permission or register, okay, under SEBI Act 1992 or any other relevant act. If they get permission, that is under section 23 subsection 1 and clause A of Banking Regulation Act, if they got permission, they will get, or they have to get permission or registration from SEBI Act. If they get that one, they will get 100% deduction for their gross total income for 5 years. The next thereafter they will get 50% of such income for 5 years. After 5 years, first 5 years will be 100%. Later on, once the 5 years finish, thereafter you will get another 50% for another 5 years. Condition for deduction. You want this deduction, that is for 10 years, that is first 5 years 100%, another 5 years 50%. What are the conditions which you have to, okay, condition which you have to satisfy? Now here, first will be, you have to, along with your return of income, you also have to provide a certificate from CA. If you provide certificate from CA claiming that the deduction or provision is correctly claimed, if you got this certificate, this one is first condition for deduction. The second condition will be a copy of permission obtained under section 23 subsection 1 and clause A of Banking Regulation Act 1949. If you get a copy of permission as well as certificate from CA, you will get deduction for 100% and till 5 years, and another 5 years up to 50%. These are the things which comes under offshore banking. Hope you have understood. If you want to know free trade zone, that is new industrial policy, new establishment industrial undertaking in free trade zone, if you want to know regarding that section also, you just message me, so I will make a new video regarding that one.